Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, and you are joining me on The Mortgage Voice. We are on several radio stations in Southern California, in the Inland Empire. I want to say hi to Riverside, San Bernardino counties. How you all doing during the coronavirus? You're all sitting at home. Maybe you're listening to the radio. Hopefully you're listening to me. If you've got some mortgage questions, if you have, things that you need to do and you're having difficulty finding answers to it, i.e., I need a refi, I need a mortgage, I'm trying to buy a house, I've lost my job, but I'm getting these other payments through either government programs or through my work, and how does that work when I'm trying to prove that I can pay a mortgage and the ability to repay rule? Anyway, hi, thanks for listening to the show. You can hear this show on Apple Podcasts, Google Music Play, all fine podcasts in and around the internet. We are on, as I said, 4 radio stations, 3 in Southern California, 1 in Central California, and 1 up in Vegas. And if you would like to see us on YouTube, go to YouTube, Jeff Barton, The Mortgage Voice, and you can see this show as well as many other shows. We are also doing a LinkedIn 2 or 3 minute per day, plus a Facebook 2 or 3 minute per day update on what are some of the significant effects on a daily basis of what happens in the mortgage marketplace. And I wanted to go through some of that now. We began that about a week ago. And if you want to see that, you can go to the Malibu Funding Facebook page. And let's see, you can see me there, as I said, talking about some of these issues. If you want to see us, Malibu Funding, www.malibufunding.net, we have our updated information that we do. Daryl, are we printing out that article on a weekly basis still?
Absolutely.
Okay, excellent. And they can see it there on the Malibu Funding website?
Yes, they can.
Okay, excellent. So we are trying to keep up with it. It is not easy. The reason being is that the information, although you can go online and see it a million different ways, most people, when they either go online or watch television or however they get their news, they're focused on one thing. And it's almost like a drug. It's like watching Donald Trump speak, because you can't get by. No, it's not his hair. It's his tie. His tie to me is so long, I'm mesmerized by it. So if you're out there and you're mesmerized by the tie or the coronavirus update or Anthony Fauci or any of these other characters in this horrible situation, but for us in the Mortgage Voice, providing answers is what I'm trying to do. So let's get into some of these. The programs. What is available? What isn't available? These are the things that change daily. The reason being, I have discussed it and I will continue to discuss it. If you're lending money to somebody, you want to make sure that they can repay that money. That's as easy and as flat as I can state it. If you have issues, you being the borrower, that you can't readily explain, i.e., I lost my job because of the coronavirus shutdown and 15 million people are out of work, how is a lender who is supposed to lend you money to buy that house you've been wanting to buy, how are they to feel secure about doing that when they're not quite sure you're going to get your job back? That's the crux of the issue entirely. And I have no answers for you except to say that if you're in a position and in industry that may or may not lay you off, best thing to do is to go to your employer if you're in a situation where you're in the middle of a purchase contract or you're in the middle of a refi. Ask your employer to give you a letter and to give you the, the best estimate as to whether you're going to remain in that job, keep that job, and at what pay scale for how long. Obviously, if you're a long-term employee at a certain job that looks like you're going to be employed regardless of what happens with the coronavirus, you're in good shape. A W-2 worker, obviously in the teaching profession, that's going to be iffy, right? It really depends on what your union says. It really depends on whether the taxes come in from property taxes in order to pay money back to the counties in order to pay for staffing in the school systems in the different cities. These are all issues and problems that are going to come up when you're trying to get a loan. So the question of what can you afford, and will your employer give you that letter that says you will be employed in the future when this is over, or you are employed now and you're going to continue to remain employed because of the fact that you're either in an industry that needs you, or your job, maybe you're a supplier of medical equipment. Obviously, those people are going to remain employed. Maybe you're in a defense business. Those people are going to be employed. In a type of food delivery to supermarkets, those people, supermarket people. There's a list and of many jobs. Construction people, they're going to be employed. Although I have to tell you that one of the things about what is considered vital and what isn't considered vital is a nagging thing with a lot of people, especially when you're told you have to stay home and you're looking at people who you think are not essential out there calling themselves essential, and they're going to work. Now, that's a personal pet peeve. I understand that people need to go to work, and I do not discourage people from going to work. But because I'm not able to walk out the door like I normally am and go to my normal job, I'm forced to stay home. It bothers me. Now, this is a bit, I guess, a rich problem, right? I have a job whereby over the years made enough money to be able to have a cushion. I know many people in the construction industry, in many of these industries, are week-by-week people. Now, conversely, those week-by-week people, i.e. people who get a W-2 on a weekly basis on a job that they work paycheck to paycheck, maybe they got 3-4 months in security in the bank, those are the prime borrowers nowadays. So the programs that we're able to lend on, Fannie Mae programs, Freddie Mac programs, Ginnie Mae programs, and these are conventional loans up to whatever the county limit is. In San Bernardino Riverside, I believe it's 625, maybe. You'll have to check on that with me, but that means that the conforming loan amounts up to that amount in San Bernardino Riverside, those loans will be purchased by Fannie Mae and Freddie Mac. And that includes the Home Ready program, and also includes the Fannie Mae program. I'm at a loss right now. But these are the programs that allow up to 97% to be borrowed by the borrower, 3% down payment, which really helps out. It's not an FHA loan. The interest rates may be a little bit higher, but you make up for that when you do not have to pay that mortgage insurance premium. And that is a big deal. You pay a different kind of mortgage protection, mortgage insurance, but it is not like a FHA loan where you have to pay an upfront fee, plus I think it's an extra 1.5 for the rate that you're going to pay for that loan. Programs, the ability to repay, and the availability of funds to your lender to be able to obviously give to you. Now, last week, we talked some about the risk that that lender has when they lend you the money in this particular climate, when they don't have the same reassurances of the ability to repay. Even if they get a letter from your employer that says, look, we're going to be back full strength. We anticipate hiring everybody back at this particular rate when we do so. Not quite sure that's going to be enough for a lot of lenders. However, if you have income during this time, i.e. your particular boss at your company got into this payment protection plan, and this hasn't been figured out quite yet, but let's say that it has, i.e. for 8 weeks, your employer could have applied for and gotten an SBA loan, which will cover 8 weeks of salary. You're a salaried employer working for somebody who's been laid off. You're figuring within the next 6 weeks, you're going to be back to work. You get that letter from the employer. You have your paycheck protection plan, i.e. you will be getting paid because the employer is getting money from SBA in order to do so. That money, how is it used? How can you prove that that's your income? And then with the lawyer, the letter from your employer, you should be able to get the loan. I would check with your underwriter, whoever is doing the loan for you, in order to make sure that I'm telling you what I think is true. But these are the things that we're trying to work out in the industry. I hope some of this is helpful. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. If you are listening to us, you can listen to us on Apple Podcasts, Google Music Play, anywhere where fine podcasts are listened to. And if you do go to any of these sources, leave us a review. It really helps other people find where we are and what we're doing. We're also on YouTube. If you go to YouTube, my channel is Jeff Barton, the Mortgage Voice. We're on Facebook, of course, and LinkedIn. We do daily 1-minute updates. There's a lot of changes going on within the industry as to the criteria to get loans. A lot of you out there who are listening and trying to understand what's happening and that house that you were going to buy, the contract that you're in, is your loan secure? Well, we brought on somebody from Nations Direct Mortgage, the managing director. He's been on the show before, Martin Warren, and I really appreciate him coming on the show. Thanks, Martin. Thanks for coming on.
Yeah, thank you very much. Appreciate you inviting me.
Yeah, no problem. Okay, we talked a little off air as to what borrowers are concerned with. Mostly it's, can I get a loan? Is it any different today than it was 3 weeks ago? And is it any different tomorrow than it is today? Maybe you can just guide us a little bit about what you all are doing to try to solve some of these questions for the borrowers.
Well, that's a broad question, but I'll try to answer as best as I can. You know, we are seeing obviously challenges in the marketplace. We're seeing, you know, like we saw JP Morgan say, hey, we're only taking borrowers with a 700 FICO score and 20% down.
Right.
For the broker community, we're seeing a wide range of opportunities still for the borrower. We, as a lender, Nations Direct is a lender servicer, so we offer product underwriting for our broker community throughout, whether it be California or throughout the country. And we still offer a broad range of products from USDA, VA, FHA to your standard conventional products. Now, we are no longer offering any jumbo offerings. That has dried up, the liquidity dried up on that, as well as some of the non-QM products, whether it be investor or bank statements. We no longer offer those today.
Okay. Broadly speaking, I think that helps. One of the things I wanted to ask you about the ability to repay, which I think is at the crux of all of this. If somebody has lost the job, but they're in payment protection from their own company, and they have some prospects of getting their job back when this money runs out in 8 weeks, how is the Nations Direct handling a particular borrower like that? Would they be ineligible, or would you take a look at this borrower?
You just look at the borrowers. We're getting, because we have, a large servicing portfolio. I mean, fortunately with 17 million, unemployed individuals, a lot of them are homeowners. So we're reacting and getting back to everyone that's calling us that needs assistance, due to the virus. So, we want to help them out. That's obviously part of our job, not only originating, but on the servicing side. So we're busy, helping these folks out. But also interesting, as before your call, I was going through our pipeline, and especially of new submissions from our broker community. And Jeff, we're seeing a lot of purchases. We're seeing a lot of purchases. We're seeing a lot of government purchases. We're seeing a lot of VA purchases now. So, I look at this as an opportunity to say, hey, even for those loan officers, don't think you can't, do financing on a property or a borrower. Now they can do, these 3D images and go inside the house and still buy a home. And we're seeing some great opportunities for borrowers now that they can perhaps give some seller concessions or discounted sale price. So I look at this as a great opportunity for those that maybe are part of the essential workforce, or maybe are, or
Right.
fixed income that maybe then can buy a home.
That's interesting. You mentioned the virtual look for the appraisers. How are you handling appraisals themselves? And do you see any effect in the real estate prices or value in the next couple of months due to the coronavirus?
Oh, I'm my own. This is me talking. I would
Right.
assume that there would be, especially some of the higher balance properties. I'm sure there'll be some pullback. But
Okay.
first time home buyers, I still think, there's a limited supply. I mean, as you were seeing a lot of homes maybe coming off the market. So I think there's a limited supply. So I think it's a good opportunity for borrowers maybe that want to buy a home. But on the appraisal side, most are external only. This is how we require, whether it be on a government loan or a conventional loan. Most borrowers don't want the appraiser to come in the house, which is fine, as long as they do the external and the same. It's still the same amount of work for the appraiser. Turn times are still about the same, so it hasn't been an issue.
Okay, well that's good to know. So you're seeing appraisals coming in fairly, I guess, consistently in comparison to the values they were getting a couple months ago?
Yes, sir.
Well, that's good news. And that coupled with the promise of employment in the future, how are you handling promise of employment in the future if you get letters from employers or CPA type letters?
Well, I mean, that's a great question. So if somebody, we do a verbal verification at time of within 3 days or at time of fund. We want to make sure and verify that the borrower is working. Unfortunately, if they're not, we can't fund the loan. If they're self-employed, our verification is we want a current invoice. We want to know that they're still doing work. Maybe,
Sure.
we want to make sure that they, if they're self-employed, that they're still in business, going full doc only. But if, unfortunately, we come across them, there's plenty of loans that, unfortunately, the borrower doesn't work, and we can't fund that deal because, especially if we're qualifying with their income.
Let's take a quick switch to volume of loans and industry-wide so that people who are listening can get a sense as to the scope of really what's happening, not only to their own lives, but to our business, what we do each and every day. What would you say is the percentage drop in your originations this month and going forward Q2?
Well, we had one of our largest lock months in March. The first week of March, where the rates were as low as they were,
Yep.
lock week in years. So we came off an amazing month of March, and April is going to exceed that. Now submissions are down a little bit, but not as bad as one would think. I mean, we're still in need of underwriters. We're hiring right now. We're in week 4 of all of our entire staff being remote, even though about half was remote prior to the coronavirus. But we've actually done quite well. Our operations staff has done, an amazing job. We were prepared, to say the least.
No, I think that's good. I think going forward, a lot of companies like yourself are going to look at this as a permanent solution, or at least a part of it is going to be permanent because I guess the effectiveness and the efficiencies are so much greater. Obviously, if you don't need to have a 12,000 square foot office footprint, that's better for the company, right?
Yeah, I think so. A lot of our associates, have children that, now that school is, like, children are no longer going to, students are no longer going back to school.
Right.
They can't come in our office, which is fine. But we have dual monitors for everybody. We have a voice phone, so they would. I mean, if I'm a broker speaking to an underwriter or an account manager, they'd never know that they weren't in our location here in Orange County.
Yeah, I agree, and we do the same thing at Malibu. Martin, I appreciate you coming on. Really, it's nice to talk to you once in a while just to get your opinions of what's happening in the mortgage place, as well as what's going on at Nations, which has always been one of the go-to for Malibu anyway. But thanks very much for coming on.
Great partner. You're very welcome. Thank you.
I appreciate it. Thank you. Thank you very much. That's Martin Warren, the Managing Director for Nations Direct. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening. If you'd like to hear us on Apple Music Play or Google Music Play, Apple Podcasts, please do so. We are on a number of different high-end podcasts, and as a result of that, we are getting more and more people listening to the show. We have good information locally as well as nationally in terms of how we're going to help you decide what you're going to do about your loan, whether it's a refi or a purchase in this very difficult lending environment. One of the people that we bring on the show occasionally in order to do that is Maria Uribe, who is a broker out in the Inland Empire who does loans for a lot of different types of clients. Maria, how are you?
I'm doing well. How about yourself?
I'm fine, thank you. And Maria, could you shout out your phone number as well as the name of your company for people who are looking for answers locally out there?
My name of the company is Inland Valley Funding, and my phone number is area code 626-991-5626.
Excellent. Thank you very much. All right. So tell me, what's happening now that the coronavirus is here? What's happening to your business? How are you answering questions and solving problems for your borrowers?
I'm actually doing well. I do have refinances, and they're just taking a little bit longer because of the turnaround times. Most people are working out of their homes, not at the offices, but
right.
Rates are still good. It's just knowing how to lock and when to lock up.
Good question. The lock rates. We are hearing that there's a 45-day lock rate, only that you can't get a lower rate if you lock sooner because they just don't offer them. Is that true with the lenders you're using?
Yes, it is true. And it actually works out even better because once you lock, you know for sure that you'll get the rate. So if one day it's higher, because, depends on, the day that you lock, then you're here for the 45 days.
Are you doing mostly purchases or refinances?
Right now, most of them is refinances, and I do have a couple purchases, but most of my business is refinances.
And how are you handling the appraisals themselves, or how are the lenders doing the appraisal? I don't know if you're lending your own money or if you're going the wholesale route, but appraisal has come up as an issue. How are you solving that?
I'm doing them based on wholesale, and I'm getting a lot of waivers right now through EU.
Yep.
So some of them I don't need appraisals, and the ones for purchases, they are allowing me to do a field review basically, and they don't go inside the house if it's occupied.
Okay, so explain a little bit to the listener what exactly a waiver on an appraisal means.
Based on the EU system, if the buyer's coming in with a little bit of down payment, or the system just allows us to get the waiver to say that the sales price is the right value of the property based on their system, then we don't need an appraisal. It's just a waiver.
Yeah, the appraisals themselves, value of property, do you think it's going to be affected, and when do you think it's going to be affected, if so, during this coronavirus?
Well, that's kind of hard to say for right now because the values are still a little bit, they're doing well okay right now. But I honestly believe they are going to come down a little bit by the end of all this, probably by the summer.
Now, do you work with a lot of real estate agents?
Yes, I do.
Okay, and these real estate agents, they must be a little bit nervous right now because obviously if they can't show properties, if they can't get people in to see their listings, their business is going to be hurt. How much are they affected emotionally by this, and what are you telling them in terms of getting clients that are looking to purchase loans?
Right now, we're just basically doing pre-qual. So we're just kind of like getting them ready for, just in case if properties go down in value. So I see
Right.
more opportunity of getting buyers, all the buyers that were not able to qualify because of $10,000 or $20,000 different in values. So just kind of like helping them getting their FICO score ready, the clients, the credit report ready,
Right.
what they're going to need, how much money are they going to need for down payment. So we're still working, but not so much on showing properties, just getting them ready for what's going to happen next instead of just waiting until it happens. And we're kind of doing a plan right now.
Now, in your own life, in what's happening there with you personally, you're obviously working out of the home. You often work out of the home. I assume that that's where most of your work is done. Yes?
Yes.
Okay. And so basically, the work at home order really didn't affect you at all. Like it didn't affect a lot of people in our industry, real estate agents or loan brokers. Most of us work at home anyway.
It really is, and we are always working on the phone and lots
Right.
of computers. So I'm doing well. I mean, I'm still working out of my house. I'm still submitting files. I'm still working my 8 hours, 9 hours, answering questions and submitting loans. So I'm okay.
No, it's excellent to know that, because I think many people who are out there, as you know, there are 16 million people have applied for unemployment insurance, meaning that they've lost their jobs. The people that you represent, are they nervous about their own jobs, or do you have anybody that has lost a job who is, now can't get a loan?
Yes, I did lose a couple files because of the same thing, especially self-employed. And FICO scores. The issue with the FICO scores now that they require at least a 640 FICO score, and if you don't have that, then it's kind of very expensive to get the loan.
Yep.
So for that, I just let them know that to wait until this is over, because your guidelines will come back again, normal, and we just hold basically their file.
Yeah, the 640 FICO requirement, it's to mitigate risk, obviously, but does it really? I mean, what's the difference between a 580 FICO score and a 640 FICO score is, on an FHA loan can get out of 500. I didn't really understand the need to do that. It just cuts out a whole segment of the borrowing population who, for whatever reason, a lot of these people with lower credit scores or people who have a certain type of job, they're still employed, whereby the middle people are the ones who've lost their jobs in a lot of respects.
I think it's because they're afraid of first payment default, or that they're going to go get help and not make the mortgage payments.
And, okay, have you run into forbearance much?
Those scores are the ones that are more risky.
Well, there's no question they're risky, but it's risk in terms of not paying bills or some kind of emergency, not necessarily losing their job. If you're employed at a 580 FICO score, today, what's the difference if you're employed if it's tomorrow? And the fact is that the ability to repay is based on your job. It's not based on your FICO score.
I completely agree with you.
Yeah, I mean,
that's the answer that I got.
Yeah, that's good, because I didn't quite understand if you want to charge them a higher rate, I guess I can understand that as a mitigating factor for trying to justify giving a loan to somebody with a 580 FICO score. But when you're with FHA, they don't have those kind of overlays. So what's the difference?
Yeah, and they're very costly. They added all these fees if you have a very low FICO score that is not even worth it. It's just better to wait.
I agree. I mean, I can say that I complain against certain lenders who jacked up the rates because they could for borrowers who really are at the lower end of the FICO score. And usually those people are also at the lower end of income. So you're double whammying these people. Not only is it more expensive to get a loan, but you're adding fees on top of it, when really at a time where somebody has a job, really shouldn't matter.
I agree with you. That's what my sister told me. She has a lower FICO score. She's a police officer. She's like, I have work.
Right. It should be based on ability to repay. Maria, thank you very much for coming on the show once again. I always appreciate it. You give great perspective, and obviously you're a working professional in the Inland Empire. And thanks for coming on.
Thank you.
Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. You've been talking with Maria Uribe. She's a broker out in the Inland Empire, and we really appreciate you coming on the show. Thanks very much, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your host for The Mortgage Voice. Thanks for tuning in. You can hear this as well as all of our shows for the past 3 to 5 years on YouTube. If you go to my YouTube channel, it's Jeff Barton, The Mortgage Voice. We are also on Apple Podcasts, Google Music Play, a lot of terrific podcast networks out there. We're on all of them, the big 8, so to speak. If you do go to them, please leave a review. Listen to it, leave a review. It helps other people find the show. What we're trying to do now, as well as most times we've been on the air, is to provide some answers to questions that you have. Now the questions are a little bit tougher because you're not quite sure if you can get that loan. You're not quite sure what the credit requirements, the programs, who's lending money, what programs are available. Can you get that jumbo? Are you, there's a lot of questions out there. So if you need those answers, this is the place to get them. You can certainly see them through our own podcasts, hear it through podcasts that we just mentioned, as well as on YouTube. If you go to www.themortgagevoice.com, you can see this show as well as hear the show. We're also malibufunding.net. We are on Facebook as well as LinkedIn. We are trying to provide the information that you need. One of the people that helps us do that for the Las Vegas market, as well as some of her other business interests, is Jean-T Chun, who joins us now from Realty One. Jean-T, how are you?
I'm great.
Okay, well that sounds terrific. So what's happening out there in the Vegas market? I know that most of the hotels, if not all of the hotels, are closed, and I don't know if it's a ghost town, but you were telling me off air that your business hasn't really declined all that much. You really only lost one particular potential client. Tell me about it.
Yes, everything is shut down. The strip is definitely deserted. You have ducks walking the strip basically, and people running. But as far as the real estate business is concerned here, it hasn't changed for me. I'm probably working just, a little bit less because I'm lazier now because I'm home a lot.
Right.
But
Right.
I still have my clients. I still have buyers, and I still have sellers. Now, the property that are listed isn't moving as quickly,
Right.
for obvious reasons. But my buyers, we're looking at stuff. So it's kind of weird. It's kind of I guess it just depends on each situation. With each agent, if you ask another agent the same question, you may get a different answer depending on their experience.
Of course.
So, but I know for sure that the supply is still low. It's still somewhat of a seller's market. It's definitely not a buyer's market. We only have around a little bit over 7,000 in inventory.
Right, that's low.
So,
let me ask you a question on that real estate side of it. Do you think how long before the prices start to get affected? How long before properties are sitting too long and sellers who want to sell are going to reduce? Or is this typical with most sellers, is that they won't lower the price until they really have to get hurt by lowering their price? What do you think?
Yeah, I think that will depend on the seller situation as well. I mean, with what's going on right now in the whole world, we're all on
Right.
lockdown. We're all going through the same thing. Now, this is what I tell my clients, though. I said, look, as long as we are still here, the earth is still in existence, we human beings are still here, we're going to need shelter. We're still going to need it. Now, and with sellers, I mean, I have several listings, and my seller does not want to drop the price. I mean, we're not losing it, but we're definitely not dropping the price either. So I think
Right. No, that's
out together.
Yeah, that's good information to know, because I know that if you're a buyer's agent out there right now, or if you're a buyer, you're looking around going, oh boy, this is opportunity central. when does Opportunity Central meet need for the buyer to sell? That's the question. Is it now? Is it 6 months from now? Is it never? When is that?
I don't know. I mean, I do have some investors hoping
Right.
for something to happen in the market. I mean, I'm an investor myself. And I can tell you too, I'm looking as well, and there's nothing, not even foreclosures. There's hardly any trustee sale foreclosure, like almost none. You know,
Right.
one or two will pop up, but so you know the supply is still low. So what that means to me, and what that tells me, is the market is going to stay like this for a while. You know, I don't foresee anything significant happen, like a buyer hoping yes, the price is just going to drop, you know, with the stock market or something like that. But real estate, I tell my clients as well, it's separate from the stock market. It really
Totally.
is. Now,
Yeah.
some people are not able to separate that, but the smart investors can, you know. So, yeah, it's just a weird time in the world right now. So I don't know. I don't have a crystal ball. I have no clue.
Yeah, I anecdotally though, and your perspective, given that the show tries to get people from all over the country to come on and talk about real estate prices in their area and what the sentiment is for them, it's very similar, i.e. we're going to be waiting until the country turns back on, because everybody's thinking it's just like a light switch, even though we're told it's not. I think it is. As soon as it's open, everybody goes back to what they were doing.
Absolutely. Yeah.
Right.
Yeah. It's just like a pause, you know, in the world, or
Right.
going slow motion right now.
Okay, so now you're involved in a lot of businesses, and you were telling me also that your ice cream store there in Vegas, you had to close. You're a small business person. How come you didn't go the payment protection route, or is it just too much to be able to do that?
Yeah. As far as my gelato store, it's just too much overhead.
Right.
And there was no way around it, basically, you know. And when you have too much expense and not enough sales or whatever, you know,
Right.
I mean, retail has dropped too the last couple of years. It's been declining and decreasing every single month. So many retail stores have had to close down.
Yeah.
Basically. And of course, you know, being a small business owner, you don't have a lot of assistance, basically. And,
Right.
you know, this is before all this started anyway, so I couldn't save that. You know, I do have several other investments in other businesses because I like
I
to
see.
diversify my, you know, my money. I don't
Of
like
course.
it in one spot. So I have a few other businesses. They're fine. I just also opened up an online clothing store for women. So you can shop online. It's an online boutique. So that's doing well, actually, because, you know, we're all home shopping from home right now.
You know, it's a great idea. Anything you can bring, we're trying to bring some entertainment value to it from this type of information across a lot of different platforms, i.e., you know, Twitter and LinkedIn and Facebook, because, yeah, we're all at home and we're looking for something new, something different, and certainly shopping is something that my own particular family misses.
Absolutely. And if any of your fans or followers are women, please check Nomi Boutique Online, as NOMI, boutiqueonline.com. You see a lot of cute stuff, and you'll see me there because I'm frugal, so I don't want to pay models and stuff. I model my own clothes.
You know, I think I did see a few of those pictures, and I was impressed by the clothes, the design. Obviously, you look terrific, so that's again, another plug for the store. Could you tell us, what is the name? Nomi.com?
Nomi boutiqueonline.com.
I see. Okay, Nomi Boutique online.com. Okay, very good.
Yes. Yeah, but if people follow me on social media, I'm everywhere. I mean, you can definitely find it because I post at least a couple of times a week about the boutique. And also, for some of the viewers or the fans that know who I am, I'm on Marrying Millions on Lifetime Channel. So that's going to be airing late summer. We're kind of paused right now in filming. So we're not done with the season yet.
I was going to say, what episode are you in now that it's, interruption of your production schedule?
I'm not sure exactly because, I see the episodes along with everyone else when the producers or when the editors put it out. So
I see. So you're not quite sure what episode or how they edited it all together. I see.
no clue whatsoever. Sometimes I'm, pleasantly surprised or not myself.
Okay, so for people who didn't hear that, she is on Lifetime's Marrying Millions, and this is their second season. And Janti, thanks very much for coming on the show. Really appreciate it. Once again, great insight as to what's going on in the real estate market, as well as entrepreneurial and in the entertainment world. Thanks very much.
Absolutely, Jeff. Love you.
Thank you. Love you too. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning into the show. We are on a couple of radio stations out in the Inland Empire, KMET and KCAA. I want to thank those people for continuing to provide this service for you, the listener. We're also on K Tahoe up in the Tahoe region of California, and it bleeds over into, I believe, Reno. Is that right? No? A little bit?
Yeah, a lot of Nevada and some California as well.
Excellent. And then, of course, recently on AM 1400 in Las Vegas, Nevada. So we are in a great swath of the central area in Nevada, as well as down into Las Vegas, and certainly up down the 15 into San Bernardino and Riverside that bleeds into a little bit of Orange, a little bit of LA County. I want to thank those people who listen to us on the podcast, Google Music Play, Apple Podcasts, and a lot of other fine podcasts that are out there. We do try to inform and keep people up to date. If you go and listen, please leave reviews, because if you leave reviews, it helps other people find us. We need to get the word out as to what's going on in the mortgage industry in terms of loans, the availability of loans, the availability of funds to make those loans, and the changing conditions in the mortgage marketplace. They are a lot, and we do this show weekly, and each week there's some new twist, some new element within the scope of what we're trying to educate you by. There are only 5 other mortgage shows on any podcast that you can hear. So when you listen to the Mortgage Voice, Jeff Barton, the Mortgage Voice, on any of these podcasts, leave a review. We really appreciate it. Also, if you want to see us on YouTube, this show as well as many others that have been on YouTube, plus we're doing 1-minute updates on Facebook as well as LinkedIn on a daily basis. You can go and see us on YouTube, Jeff Barton, the Mortgage Voice, and also Jeff Barton on LinkedIn, and my Facebook is Malibu Funding. I think it's malibufunding.com. Is that what it is on LinkedIn? On Facebook?
I think it's under Malibu Funding, correct?
Okay, very good. So any of these,
search for that.
okay, great. Any of these outlets that you can get the information that we're trying to provide to you is the way to go. And thanks very much once again. www.malibufunding.net is our website. So, look, we have a large cat walking in the screen. This is what happens.
Cat.
This is live TV, ladies and gentlemen. This is
A big cat.
Okay, so what is happening? Let's just get caught up a little bit. I wanted to talk to you about what's happening. Fannie Mae has a pretty good article today in the Mortgage News Daily, and what they try to do is to give us updates as to what's going on. And what they said about what Freddie Mac said, and it's again Jan Swanson writing the article from Mortgage News Daily. It's a place we go to each and every week to try to catch up with what's happening within the industry. You can go there. It's Mortgage News Daily. Great place. I get a lot of information that is, as I said, strictly for, I think, industry professionals. But if you are of the mind to be able to read a lot of information, get a lot of text, and to be able to keep up with it on a daily or a weekly basis, you will be as informed as anybody in the industry. One of the things they did say about the real estate market was they think that the real estate market is going to bounce back rather swiftly and not really collapse all that much. They did say that the second quarter numbers were going to be horrific, 45% down in terms of overall sales. So if you're a seller out there in the marketplace and you're trying to find a buyer, or if you have a buyer, and by the way, I have a brief story to tell you about that. We were in a negotiation with a seller, got into contract, and then the coronavirus hit. The seller wanted to press us again and again as to when the loan was going to happen, and we kept saying, look, we're in a pandemic, our resources are scattered, not only that, is that the lenders themselves are trying to figure out how they are to underwrite files when they have a particular type of borrower, which we had. We had a borrower who didn't have the greatest of credit scores, but did make the income with which to be able to afford the loan. The parameters with both warehouses, the people that provide funds to a lot of lenders, Malibu Funding included, plus the parameters of the investor were changing. So they were upping their credit scores from a low of 580 to 640 minimum, as many people have done in the lending industry in order to try to protect themselves, mitigate risk. Okay, so what did the seller do? The seller began to get angry and threaten, and when I spoke to the agent, it wasn't my particular transaction, it was one of my loan officers. I asked the agent, I said, look, your seller is in a really tough position right now, right? Well, the seller's agent got very angry. I think we spoke about it briefly on the show a couple of weeks ago, and I was thinking, why are they getting angry? I'm the solution to the problem here. I'm not the problem. The problem is the coronavirus has changed the parameters in lending. So I had a borrower that was approved with a loan, had a 580 or thereabouts, let's say 600 FICO score, and the criteria for both the investor and the warehouse to lend the money raised the FICO score to 640, which meant that we really had to go out and find a new lender. So the delay was what the seller's agent was angry about. But they didn't really understand that based on this new paradigm, the buyers out there are going to be few and far between. If you had one at a if you had one at a price that you were able to work with, you should try to work with that borrower to get him that loan, because that price may not be available, Freddie Mac information notwithstanding. So in regards to price, in regards to what the real estate market is going to do, we're going to talk to a couple of people, and we have talked to a couple of people on the show today about real estate prices and about how real estate in overall, if it doesn't go bleed into September or October, we should be okay. The demand is there, and one of the things that I also read today about millennials, that millennials have finally stepped into the market big time. We've gone from 26 to 27% involvement by millennials in the real estate market to 37% in the real estate market, which they are the largest block of purchasers of real estate in the entire scope of people in the marketplace. So millennials getting into it, 37% of millennials are now invested in the real estate market or are looking for real estate purchases. That's a big number. This, again, is the largest purchasing group of all generations, baby boomers, even them. So if you're out there and you're looking around for some answers, you're looking around for, a lender, understand that, one, real estate prices don't seem to be collapsing the way somebody who's waiting around for that to happen in order to take advantage of it. I would say that if they do fall, 10% is probably the number that you're looking at, unless we get this, and I've heard some predictions that this is going to be a problem through 2022, meaning all of the rest of 2020 and all the rest of 2021 is going to be a problem. I'm not there because I just don't have that crystal ball. I wish I did have that crystal ball, but I don't have the crystal ball. So real estate value, the prices, we're looking based on what Jan Swanson says at the articles she wrote, look to be okay, according to Freddie Mac, and look to be that way unless we bleed into September with the coronavirus epidemic not allowing people to get back to work. Let's see, we talked about earlier in the show a little bit about what's going on in programs, how programs themselves are going to be affected by the work slowdown. Ability to repay is the largest, single most, important criteria when it comes to deciding for a lender whether they're going to lend you money. Credit scores have risen. 640 is a minimum in terms of both the warehouse and your investor. So if you're an FHA buyer, you have to make sure that whoever you're using has loans. Usually it's a direct lender, and that's the way to go in terms of trying to figure out if you can use a below 640 FICO score on an FHA loan. That's what I would recommend. Anyway, it's been a great show. Appreciate you all listening, and we'll see you next time. I'm Jeff Barton for The Mortgage Voice, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.